Hi, this is Jack from Alpha Charts with a state of the market video. Today is May 29th, 2021. All right, so let's get started. Before we get started though, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so SPX. Um, Beautiful week, you know, right back near all-time highs. Everything's looking good. Look at the RSP, which is the equal weight. Again, still looking great. So nothing of concern on the SPX. On the Qs, there's a couple different things that could have happened on the Qs, right? So this could have been an A, B, C pattern. This could have been some kind of head and shoulders pattern. I guess technically could be still. But I think this trend channel is probably the more likely scenario. So I'm going to go ahead and just zoom out just a little bit here. And I put fibs on this. So let's see where I put the fibs from. Here we go. Looking back here. And if you notice the fibs I put on from the 2000 high to the 2002 low, right? So when we look at this fibs, the extension, the 1.618 extension is right at 371, we'll call it, right? So where are we now? We are at 333. There's about a 10%, I'll just measure it out for you right there. Roughly 10%, 11% between here and here. Now, we don't know if 1.618 extension of that is going to be the place, right, where we get maybe a larger pullback or something like that. But we do know that it is within the confines of this rising channel, and it has the potential to be a place of significance, right? We won't know that till after the fact. So it is an area I'm watching. The good news is there's 11% between here and here, right? So why not, be bullish during this area? Then if we do get up that way, get a little bit more defensive at that point. So that's the good news. And again, it may not be a place of importance, but I think it could be. So that's what I'm watching. Again, it would fit within the confines of this channel, and it may just be this is a place where it goes from the top back to the bottom of the channel again, or maybe something more, or maybe it doesn't even respect it at all. We'll find out. But an area I'm definitely watching. All right, looking at equal weight. Again, looks very good. Looking for a breakout above 81-ish, 82, somewhere around there. So not very far off from all-time highs in the equal weight Qs. Very bullish. You see the crossovers happening. You see the crossovers happening. Moving average crossovers. Everything looks really good. IWM. Again, just this sideways consolidation. Not doing anything wrong. Not really, outperforming in any way, shape, or form. But there is a crossover that's now starting to happen right here. And again, this is just maybe a consolidation of this uptrend. So looks pretty good to me. Looking at the IWO, a crossover, it looks like it's about to happen, right? It's imminent. So this area held that needed to hold. We had a little shakeout right down here. Now it's moving higher. Moving average is tightening up, about to cross over. So far, it looks pretty good, right? Yeah, nothing really, nothing concerning in IWO. Would like to see this outperform a little bit, right? Get back to all-time highs. Let's just see how far away we are from that. I don't know, 12%, 13%, somewhere around there. So it's not bad. All right, so that's IWO. So let's look at the sectors. XLF, just leading, right? Which is great to see. Good for the market overall, I think. And it closed at an all-time high, it looks like. So that's pretty amazing. Yeah, the IYG, I would suspect to look exactly the same, right? Let's look at SMH. So SMH had a pretty good week. Boom, we had the crossover coming back up to this area right here. It's nice to see that it's kind of, we'll call it leading. It's making a double bottom. which is great. So if you miss this move off the bottom, and there's, in my opinion, no reason to guess that this was the bottom. There's a chance of it, but we didn't know. But this is going to be a new area up here, right? This 257-ish. So I like this as an indicator, right? We got semiconductors moving higher. I think that's good for the market overall. But also a lot of great names in the sector. And so if we can come back up here, maybe base out just a little bit, and then move higher, I think that would be I'd look at the components of it and see if there's any opportunities in there on the long side. All right, lumber. Let's see. Okay, now lumber's interesting. I consider lumber a leading indicator, right? So again, I'm not trading lumber. I'm looking at this as a leading indicator. Here it is on the weekly chart. And we're starting to see some weakness come into lumber, right? Last couple of weeks, 1, 2, 3 weeks in a row. And when we break it down, now we see a moving average crossover, and it's starting to get a little bit more, let's say, I don't want to say bearish in nature, but concerning, right? Now we could just kind of bottom out right here and make the right side of some base and keep moving higher. But a rollover here, continued downward movement, would make me more cautious looking out, we'll call it 6 months or so. So towards maybe the end of the year, maybe even 3 months. It could be the end of the summer, into the fall. But this move right here, so lumber I consider it, a measure of economic activity, right? Housing and pretty much everything else we do takes lumber of some sort. So this move crossover right here, again, looking out 3 to 6 months, may be indicative of something, in the future. We don't know, obviously, but I am taking notice of this because I do consider it a leading indicator. All right, so let's look at the 10-year yield just for funds. So with the 10-year, I'm going to just switch this out and just get rid of some of these moving averages. All right, the 10-year, it's still kind of basing in a range. We didn't get that big spike up that would have caused me to be concerned, which is great, right? And I think we've seen, the stocks do well with this. It's just kind of moving sideways. The percent right now it's low, right? We don't care about the percent. We care about the shock to the market, and there isn't one. So I think that is definitely a positive. And again, we're seeing in equities, again, a big up spike up like this, right? That would be a bad sign, in my opinion. Again, it's the movement, the rate of change. All right, looking at the spreads. So again, what are we seeing in the spreads? Really not much, right? We're seeing the sideways movement, no spikes up, nothing that looks concerning. We don't even need volume on here. I'm not sure why that's still on there. Boom, no volume. All right, so nothing that looks concerning. Everything looks fine, right? If we see in this type of movement, that's the concerning look. We don't see that right now. It's just a sideways movement. Nothing to be, in my opinion, to be concerned about structurally. Again, the VIX, I mean, 16.7, nice and tame, falling, right? Lower high, lower high, lower high. Everything looks fine with the VIX. Nothing concerning. But call ratio, not overheated, not over bearish. So it's in a bullish range. Looks fine to me. Value line geometric index. I was worried about this divergence. It's still there. I may be able to now do this, right? Change my trend line just a little bit. But in the end, it's still showing a divergence, which is not resolved yet. But it looks like, it's going to have to be pretty darn soon. And that's fine. Again, this is, marking time, basically. It's going to stop the divergence through time, which is fine. It doesn't have to always be through price. So I'm not too worried about that. Again, it is right at all-time highs on the value line geometric measure of breadth of the market. MMFI, another measure of breadth. We see that we had this nice little rebound up here. So that, again, looks fine to me. Would like to see this continue higher a little bit. But again, as long as we don't roll over and take out this low, which is about 38% or so, I think then everything is fine. Let's look at gold versus the SPX. I like to look at that again. So here we go. Let's go weekly. Here's gold versus the SPX. We have this downtrend line. I guess daily is better. Maybe some outperformance starting to creep in there. I don't know, but could be. And here is gold by itself. So this is a pattern we've been watching intermittently over time. We have a big basing pattern, nice big move in gold this week, right? So hasn't broken out yet, but it is making kind of the right-hand side of a very symmetrical look to it. That's something that I'm taking notice of, right? I think it's a big deal. A lot of people talk about silver. Sorry, not steel, silver. So silver, as you can see, I think weekly look better. Here's silver. This is an important area, and then kind of popped up, and now it's kind of basing, and maybe it needs a little bit more time here, maybe not, but people talk about silver. It looks good. And GDX, we'll just look at that real fast. So here's the miners, and we have the breakout, the retest, the move higher. So I think miners overall look pretty darn good too. I own a couple right now, but yeah, they're doing very well. So I think let's go ahead and just pull back to the cues. Yeah. So my final thoughts. Structurally, market looks fine. I think that we are in the mood for a big rally. I think that sentiment isn't overdone. Let's just look at fear and greed. It's at 38. Sentiment seems okay. Put call ratio is not overheated. Breadth is improving, good and improving. I think that longer term, maybe in the fall or end of the summer, September-ish, October, somewhere, August, whatever. Maybe there's something to do with it when Qs reaches 371 level. Maybe lumber's giving us a sign. Maybe gold is starting to people are positioning gold a little bit more. Maybe maybe it takes all summer for interest rates to base out here and then to spike up, maybe, but that's not what we see right now. And I think we have to trade the charts that we have and the information we have today. And today, I think that there's room to the upside, and so that's the way I'm going to position. I think right now structurally the market's very healthy. Could change any week, and that's why we do these every single week, to try to identify areas and things happening in the market. So a few things in motion, but nothing that I'm concerned about. And I think it's a bull market right now, and I hope we all are able to take advantage of it. All right. Thank you very much for watching. I also, coming out probably another hour or two, I have a new Inside the Trader's Head. I was able to have a nice conversation with Oliver Kell, the 2020 U.S. investing champion. Great conversation. If you had a chance to check that out, he talked about the way he trades and a lot of different setups and what he looks at. We talked about his new book. We talked about all kinds of stuff. How he uses Twitter and how he uses different social media. So definitely check that out. It was a really good conversation. You won't want to miss that. If you like these types of videos, like and subscribe to my channel. It really does help me, and I really do appreciate it. Share this video on Twitter. Again, just the more it gets around, the more I'm going to make videos like this and other content. So again, thank you all very much. I'll do my stocks to watch tomorrow and Inside the Trader's Head coming out later today, Saturday. Y'all have a great day. Bye.